There we go.
Okay, so
we are recording. Thank you to everyone for joining us for our Startup Tech Accounting Session 101 with Mason Darabi of Tandem Innovation Group. A little bit about Alberta Innovates before we start. We support innovation from the generation of new ideas through to commercialization or end use. This includes support via funding, technology development support, and applied and basic research initiatives. And our multifaceted approach helps drive the innovation agenda across the province and creates pathways that help accelerate research and innovation to market for the benefit of Alberta. I'd like to tell you quickly all about an initiative Alberta Innovates has undertaken to increase awareness of technology activities and successes in Alberta. We've set up a webpage for any company in the tech ecosystem to support. So it can be anything from a new tech company you started to successes achieved as your company scales and grows. So to tell your story, you can head over to learnhow.albertainnovates.ca and go to the Telling Your Story section. Your story could be featured across a number of our platforms, so it's a great way to increase awareness of your organization. Next, I'd like to introduce our guest speaker, Mason Darabi. Mason is a chartered professional accountant, a venture builder with Tandem Innovation Group and Red Thread Ventures, CIO at NDAX, CFO at Levitee Labs, and a global expert at Blockchain Founders Fund with an educational background in engineering and management. Mason, thank you very much for joining us today, and I will let you take it from here.
Yeah, it's our pleasure. Thanks everyone for attending, and yeah, I'm super pumped up for this session. Hopefully it's useful to everyone at the end. So.
Mason, you muted yourself accidentally.
Is it okay now?
Yeah, you're good.
Okay, great. So yeah, we have quite a bit of material here to cover. I have 47 slides. I'm not going to go through everything. I'm going to start with the bread and butter of our session today. And if we need to delve into like details, we can definitely do that towards the end. So the topic of this presentation is we are going to talk about accounting, which I'm sure that's near and dear to everyone's heart. And I'm sure that the way that I'm going to talk about accounting today is going to be different from probably some of the conversations that you may have had with your traditional CPAs. I'm a CPA myself too, but we are going to present this as more of a from the founder perspective, not as an external accountant. So as Dana introduced myself, I'm a CPA. I lived out of the accounting world for almost 11 years, worked basically for my dad for some time, and then I was in the trenches of IT for a long time, more on the Oracle application implementation and whatnot. And through my own entrepreneurial journey, I realized that usually tech entrepreneurs are great in developing technology services and building new innovations, but sometimes we fall short on financials. So when I moved to Canada in 2011, I decided to become a CPA. So I will hand this over to Mark to introduce himself and also talk a little bit about Tandem. And as we are introducing ourselves, please feel free to put your information, your name, the company you are from, and what do you like about accounting and maybe what you don't like about accounting, so we can kind of gauge where everyone is standing at in terms of our audience, and we'll go from there. Thanks.
Yeah, awesome. Thank you so much for that intro, Mason. And thanks again to Dana and Alberta Innovates for coordinating this. I think we're both really excited for the opportunity. So just a little bit about myself, super international background. I've worked across 5 different countries, 3 continents, everything from management consulting in Europe to a tech startup in India, and more recently into venture capital and finance. So I started my career in VC in 2019, actually in Bangkok. So that was super interesting. Got to live in Bangkok for all of 2019, moved back early 2020. And that's where I, met some of the folks from Tandem Innovation Group and, began working with them. So basically what I do is I'm building a firm called Red Thread Ventures. So, as we go through this presentation, you'll kind of notice that we're trying to take a super co-founder approach in terms of the CFO role. Tandem Innovation Group is primarily a network of CFOs. And I think over time, they realized that, hey, it's a great idea if we angel invest into our clients. So this is just a slide a little bit about more on Tandem. So, I mean, we're a network of venture builders, investors, accounting, and finance professionals. And like I was saying, with a co-founder mindset. So through some of that, angel investing, there was some great success. Some of the companies had some good exits, were able to raise a lot of money. And that's where Red Thread Ventures came into play. So Red Thread is essentially there to do this, co-founder insider kind of investment strategy at scale. And Red Thread is what I'm focusing on primarily. So I think, Mason, you can flip to the next slide there. So these are just some of the clients that, some of the Tandem CFOs worked with from very early on all the way to a liquidity event. So some of our, original investments, Alberta Innovation being a great example, Solution Financial's public, Backstage Plays public, Quick Mobile was bought by Cvent, and Matza was actually bought by Sensient. So yeah, just a little bit, more information on kind of our investment strategy, as well as the strategy we take as the CFO. So again, trying to come in there with a hands-on approach all the way from early stage startups to a larger, public transaction. Tandem Innovation Group and Red Thread Ventures are kind of, working together to support all of what would be necessary to grow a business from startup all the way to exit. So yeah.
Awesome. So yeah, if you need any help, if you're raising fund in the next 6 months, make sure that you connect with myself and Mark. Mark, if you don't mind, please feel free to add our contacts into the chat. So if you want, you can connect us on LinkedIn, and yeah. And if you need any help, we're here to support.
Yeah, and like Mason was saying too, like feel free to add your guys' contact info in the chat, and also especially if you have any questions throughout this presentation, you can definitely write them in the chat. I'll be monitoring that, and then we're also going to have a little dedicated 10-minute Q&A towards the end where we can answer everyone's questions in detail.
Wonderful. So yeah, everyone, I hope that everyone is safe, and over the past 9 months, I guess, that we have been going through this unprecedented time, you have been doing well, and you're healthy, your family is healthy, and obviously it's a different time. Some of the stuff that we have been doing has turned totally upside down. Hopefully with the vaccine coming up in the new year, things will go back to normal. But some of the changes that have happened, in my personal opinion, are going to like permanent changes. Some of them are great, and some of them may not be that great. Obviously, the way that we develop relationship has changed. Like, I'm sure that if we were doing this in a normal condition, maybe we were all getting together at Alberta Innovates office or some other like venues and doing the presentation, but everything has went online. So I'm sure that there are lots of people that they have been attending these kind of like meetings, even from across Alberta, and even maybe from other provinces or from other countries. So yeah, some of the stuff that has dramatically changed over the past few months, I would say the buying behavior apparently has changed. If the company, or if even in personal life, like if we are dealing with financial strains, probably we are not spending as much as before. The way that we are engaging has changed. Like lots of emails and electronic communication has replaced that one-on-one kind of personal touch that we used to have, and instead of meeting in bars or like for coffee, like we always send like Zoom link. I have been using all kind of platforms from Microsoft Teams to Zoom, and some of them are not really working properly on my computer. So yeah, the way that we are dealing with our supply chain, the way that we are making like partnerships, the investment philosophy has changed. So some of the companies that they were dealing maybe with some like physical goods, maybe they're not getting enough attention from their investors. And then on the other side, on the flip side of the coin, yeah, if you're an AI company, if you're building technology to make things more efficient, probably you are at the spotlight of investment. Staffing, I'm sure that most companies, they were used to hire their employees from their local cities. And now this has opened up an opportunity. Like I know some companies, even like large companies, they have decided that they're not going to have any like physical lease anymore and everything is going online. I'm not saying that's good or bad. Like I'm just saying that things have changed. So financing, cash flow, we are dealing with some high level of uncertainty, but I'm sure as entrepreneurs, we are used to it. Like going and building a startup company is always it always entails a high level of risk. Now we are dealing with some like new risks that hopefully everyone has been able to figure out how to navigate through it over the past 9 months. But lots of the stuff still, they have stayed intact. Our core mission and purpose, like if you are a startup company building medical devices, I'm sure that I don't see that why you should have changed your line of business. Payroll, still the companies should pay their staff, hopefully. You have to still pay your vendors. Yeah, you have to do lots of stuff that probably you were doing even before pandemic. So considering all these like changes plus the things that have stayed intact, like I think the best approach, regardless of the time that we are in, is to kind of start planning and understanding the gaps, define your plans, and then start executing. So like that kind of approach is applicable regardless of the whatever that we are going through. So one of my favorite books, I don't know if anyone in our amazing audience has read it, is from Guy Kawasaki. He's one of my early on kind of mentors that I'm following his thought leadership in the entrepreneurship space. In his book called Enchantment, he talks about 3 factors that literally determines the make or break of a startup company. He says, to be able to have a successful company, you need to have a right product and service. You need to have a right vision where the market is going, what's happening in the macro economy, what's happening in your target markets. Yeah, like having a right vision is very important. And the third option that I think it sometimes falls short for many entrepreneurs is having a financial management. If you look at the stats for the startup companies that they go out of business, they usually go out of business within their first 3 years, not because they don't have a right product or service. Usually they run out of runway. So they don't have enough cash to be able to get to the market. They are not able to price their product properly. So having a financial management is as important as developing a product. I can't really emphasize enough on that. Like I can give you tons of examples of companies that they didn't get the number 3 here right, and they were out of business. And as part of I like what Guy talks about financial projection. He says, financial projection is an art. It's you are telling a story with numbers. It's very similar to the way that you pitch your business to your customers, but you are backing it up with numbers. You talk about market forces, your growth, the milestones that you're trying to achieve. You're talking about your profitability plan, and your job as a CEO or one of the founders of the startup is to be able to tell that story. So I think usually, I mean, this is traditionally most startup companies start with technical co-founders. So make sure that you get a CFO, a co-founder with a co-founder CFO on, for your startup, so you can bring everything together. And sometimes it doesn't really make sense to go and get a full-time CFO, because again, like you're at the startup stage, you don't necessarily afford to pay, or you may not need a full-time CFO. So companies like Tandem and then Red Thread Ventures, we are all here to help you guys to be able to kind of augment your capabilities on the technical side with the financial management that we are championing for. And everyone, please feel free to pause me if you had any questions, or as Mark was mentioning, please feel free to put your question in the chat, and I'm sure that Mark can share it with us. Okay, so I think one of the things that's very crucial is to develop some routines. And as I was saying, that I'm sure that if you're talking about building your MVP, I'm sure that you have this kind of approach that you assess the gaps, you plan, you execute, get a feedback, go back to the sketching board and redesign and redefine your plans and execute again. So for financials, it's the same. And to be frank and honest with you, if you are not measuring your success from the financial perspective, you won't be able to manage it. So developing a habit of defining a plan, defining financial KPIs, and tracking the metrics from early on is going to go a long way. And you may be surprised to see, like, there are companies that they want to go public, and at that moment they realize that, oh, okay, like we don't have the right documentation, we don't have the processes, and then everything is in shambles. So if you are an earlier stage startup, just start with some very, very simple and basic like routines, which I'm hoping that I'm going to share with you over the next 9 slides that I have. And then if you want, we can dive into the details afterwards. So the way that we have designed these slides, I'm not going to talk about like IFRS 16, how you have to do like revenue recognition. Like, this is beyond the scope of our presentation. I'm going to talk about very pragmatic points that hopefully after this session, if you take notes or whatever, you can start implementing them right away and help you to have better financial management in your startup company. And yeah, as I said, like it's going to help you as long as the company is growing. So when you're designing your financial system, make sure that you're involving all of your team. Like if you have a marketing team, if you have a product management team, get them involved in the process of designing your accounting practice. The reason being is like lots of the stuff that they're doing on their end has financial implications. And if they don't have a voice at the table, it's really hard to capture it afterwards. Like a very quick example, like I'm sure that most of you folks are aware of some of the tax credits that are available for startup companies. The most famous one is called SHRED, Scientific Research and Experimental Development. So if you don't keep the track of what is qualified for SHRED from early on, maybe you won't be able to take advantage of those. And usually shreddable costs or expenses, it usually happens at the production of your product or service. So if you are building a new innovative system or you're building a new software, maybe there are some SHRED elements into that. So making sure that your CTO or the technical co-founder is at the table is very important to design these processes. And if you don't know something, it's well said, you don't know what you don't know. Seek advice. So try to reach out to people like myself. If you have an accountant, talk to your accountant. Just make sure that you are aware of what's ahead so you can plan for it in advance. And as I was saying, that start implementing systems and processes. So I'm not talking about like, I'm not talking about something very complex or complicated, like having an expense report early on in your startup journey can really help, because if you're buying something, make sure that you have the receipts, make sure that you're getting the proper approval from the higher up of the company. So having those processes and systems in place can really help, because of the fact that you may go public one day and then you need to get an audit. And auditors are going to come and they are going to look at your processes to see if your controls are strong, if everything has been prepared properly. And guess what? Like if they are not prepared properly, they can't really say that the financial statements of the company are not misrepresenting the facts. So getting into the habit of having the documentation for pretty much everything, getting approval. If you are having a bank account, having two signatures on checks, like these kind of basic stuff can really help you to build a very strong foundation for the future growth of your company. Mark, is there any questions so far?
I think this is probably a good point to just stop for a second and maybe ask. There was a lot of comments in the Q&A. So do any folks out there right now at this point have any questions? Because I think this is about the halfway point. If you do, feel free to ask. If not, we can address it at the end as well. And you can always use the Q&A box.
You can open up your mic. So.
All right. So I think we'll just continue then, Mason.
Sure.
And if there's any questions,
absolutely.
folks, we'll address some at the end in a Q&A session, and you can ask them in the chat too.
Absolutely. So I'm sure that you have been walking to many like investment meetings. I remember from my personal experience when I was living in Norway, and one day my dad called me and said, "Hey son, I want you to come back." And I said, "Okay, I'm living my dreams here." And he was saying that, yeah, I'm going to all these investment meetings and people are throwing at me like with financial questions, which I don't know what those questions are, let alone to be able to answer them. So getting to understanding the tech/accounting language is very important. And I have a whole list of like terminology that I'm sure that you have come across if you have already dealt with investors or with your bank. I'm just going through a couple of them, but yeah, building that kind of lexicon of like accounting, so you understand what exactly the person who's asking the question means about that terminologies is very important. So revenue is what you are selling, and hopefully generate some value for the company, and that's called revenue. So revenue is not always in the form of cash. So it would be nice, like if you sell your service or your product and you immediately get cash. Sometimes, yeah, you have to wait until 2 months to get the money from your customer. So it can be account receivable and whatnot. So cost of goods sold. So if you're building a product, there are some ingredients that you need to build into that product or service, regardless of having a company or not. And usually those are costs of goods sold. Like if you're building a widget, the cost of material, the direct labor costs, they go to the cost of goods sold. And then you need to measure the cost of goods sold to be able to properly price your product. Financial statements, obviously, if you look at any typical financial statement, usually you have like 3 main statements. Balance sheet, where you capture your assets, your liabilities, anything that you owe to any lender, and equity, the share of founders and investors in the company. You have income statement, where you capture your revenue and expenses, and you have cash flow, which is very crucial. Cash is literally an oxygen for a company, and if you don't do a proper cash flow management, it's really hard to get to the finish line. And when I'm talking about finish line, I'm not literally talking about exit. Like, I'm sure that you will set metrics and objectives for the company along the way. So understanding how cash flow works is very important. Fiscal year versus calendar year. So these are absolutely different, and they are different from tax year. So if you are incorporating your company, let's say in September 2021, you can choose your fiscal year as from September 2021 to September 2022, or you can choose December 2021 as your fiscal year. Calendar year, obviously, it ends on December 31st. And tax year, depending on personal tax or like for personal tax, April 31st is usually the deadline. For companies, it depends on the type of the company. The deadline can be different. And by the way, like I'm not a tax accountant, so if I'm talking about anything about tax, just take it with a grain of salt. You have all kind of engagements that if you're going through preparing the financial statements, you will hear from your CPA or your external accountant that they talk about completion engagement or notice to readers. So that's the easiest one to prepare, and it has less disclosures. Review, obviously the auditor, they apply some like procedures to go through the financial statement and kind of say that we think that the financial statement are prepared properly. Audit, it's more granular investigation of the financial statements and the disclosures. If you are in earliest stage of startup, you don't need to bother even thinking about review or audits, but I'm sure that you need to prepare the compilation notice to reader for the company. Shred, as I was saying, that there are lots of great grant programs available in Canada, depending on the province that you are in. Yeah, make sure that you talk to folks like Dana at Alberta Innovates to know what grant programs are available that you can take advantage of it. Probably those are the cheapest financial resources that are available to you, even if they may not be too significant. Talk to your industrial technology advisor. So I'm sure that Dana would be able to give more color on how you would be able to access to the ITAs within Alberta Innovates. Dana, do you want to make any comments about the industrial technology advisors here?
I was actually just writing into the chat. I'll post a link to our website. So if you want to get connected to a TDA to talk about our grants, that's a technology development advisor. You can follow the link, and it's connectwithus.albertainnovates.ca. And they will connect you to talk with a TDA that can tell you about grants, connecting with ITAs, etc. So I will put that in the chat right now. And if anyone wants to go check that out, they can.
Wonderful. Thanks, Dana. So yeah, you will be walking to investment meetings, and your angel investor or your VC is going to ask about your burn rate, like how much is your burn rate per month, which means that how much cash you need to be able to survive until the next month. So as I said, runway to get to kind of a point of like break even and making sure that the revenue is enough to be able to cover all the expenses that the company has. So customer acquisition cost, building product is not enough. Like you need to make sure that it's going to get sold. And then if you're taking advantage of any like distribution channel, let's say if you're selling your product on Amazon, like the fees that you're paying to Amazon so you can sell your product is part of your customer acquisition costs. So understanding these terminologies can really help you to be able to walk to the meetings with confidence and answer questions and have a meaningful conversation with investors, with your bank, and with your vendors and your customers. So, okay, so when I started the CPA program, I was working at a firm, and yeah, like I used to receive lots of shoe boxes of invoices from clients. Time has changed, and I'm not saying that, unfortunately, not everyone is proponent to change and adopting new ways of doing things. But if you are in an earlier stage of startup, try to use cloud accounting applications like Paperwork, like QuickBooks Online, like Xero. Make sure that they have integrations with other applications. If you're using Slack, probably you can connect it to your Google Drive, or if you're, I'm a Microsoft person, I'm not shy about it. So if you're using Microsoft Teams, connect it to your OneDrive and everything, like taking advantage of integrations of applications, as I was talking about, like all of these, like and these are not all the applications available out there, but probably some of the most important ones that you can start using, Like if you're dealing with your customers or even with your investors, maybe using HubSpot can really help. And as I was saying, that taking the advantage of the integrations between these platforms can make your life easy, and it can reduce the friction and the flow of information between different applications. So just a quick example, like many of the banks now they support, so you can ingest the data out of your bank account and directly take it to your accounting platform. So take advantage of all of these cool technologies available to us, and yeah, build the back office of your company from the financial and management perspective. And it's part of the job of your CFO, I would say, to help you to kind of start building these integrations and applications into the routine of the company. The art of your chart of accounts. So as I was talking about different financial statements, basically, if you are buying or selling something, or if you are paying for something, that's an accounting transaction, and that transaction probably relates to some category which we call it chart of account. So keep your chart of account as simple as possible. For revenue, like if you have like 2-3 like revenue streams, keep them separate. Like if you are building 2 products and then you have the service, keep those separate. The same for your expenses. You don't need to create a new category for each class of transaction. Like if you are wining and dining your clients, probably that's meals and entertainment. If you're buying, I don't know, like supplies from Superstore for the company, and you're buying supplies from Canadian Tire, they are supplies. You don't need to have an account supplies Canadian Tire, supplies Superstore. It doesn't matter. So keep your chart of account as simple as possible, but be very detailed. I like this quote from Einstein. He says, make everything as simple as possible, but not very simple. So make it simple, but be detailed enough so you can refer, especially when you're talking about metrics, so you can go and kind of measure and keep track of things. Try to not have miscellaneous ask my accountant account in your chart of accounts. If you don't know something where you have to categorize it, let's say you have bought an equipment and you don't know if it's a capital expenditure or it is something that you can expense it. Talk to your CFO, talk to your CPA accountant and figure it out. Don't make a clutter of all kind of transactions mashed together in miscellaneous account. Doesn't mean anything. And I like when I was going through this deck with my mentor Sean Hudgens, who's the founder of Tandem. He was saying that if you go and look at the financial statement of Microsoft, probably it has maybe 10 line items. Some companies, they have 400. So just keep it simple. So try to kind of classify things to same category as much as possible. But as I said, be very detailed. Some of the best practices that's going to save you in a long run. And if, I don't know, 2-3 years from now, if you start implementing these practices and you were saying that, okay, that it seems it's working and it saved me from lots of trouble, maybe send an email to me and say thank you. Like these are very, very basic things, but it's really, really impactful on the longevity of your business and your future success. Keep your personal and business expenses separate. As a founder of this early stage company, most likely if you go to the bank, maybe some banks, maybe they open a bank account for you. Sometimes you need a little bit like more documentation you need to incorporate before you can open a bank account. So I'm sure that you start using your personal credit card or your personal debit card to pay for some of the expenses that you're incurring to build your startup. That's okay if you want to take advantage of the points that you're collecting, like air miles or whatever on your credit card. That's okay, but keep it separate. Like if an expense is related to the company, maybe record it, keep the invoice separate so you can capture it in your accounting system later on. At the end of, I don't know, every week or maybe at the end of the month, depending on how much transactions that your company has, maybe just take 5 minutes. Look at the financial statement, look at your accounting records, not financials, look at the accounting records of the company and just ask yourself, does this make sense? Like that 5 minutes, you may capture some like errors there, or maybe you can capture some anomalies that's happening in your operations or your product development that you can go back and change it. Look for negative numbers. So if you have an account with negative numbers, most likely it's not classified properly and it's not correct. So it doesn't make sense that if you have a negative cost for cost of goods sold. So probably there's something wrong there. So as I was saying that, like if you get into the habit of looking at like your accounting records from time to time, just spending that 5 minutes, maybe compare this month records to the last month and look for some like weird like variances. If the cost of goods sold, or I don't know, if the meals and entertainment has gone up by 300% when your sales is declining, that's probably that doesn't make sense. Yeah, maybe it makes sense if you're trying to attract more customers or try new like revenue streams, but give some thoughts around these like very like high variances and try to come with some sort of like justification for it. Maybe there's an error that's happening there, or maybe this is an early on like kind of alert that maybe something needs to be controlled and then tightened up. Do very regular like bookkeeping. Even if as simple as having a spreadsheet capturing, okay, I paid for this, this was the purpose, this is where I bought it, this is and then I use my personal credit card. Or as I was saying, that use the automation and then the technology is available to you, and then just use like different applications that I mentioned before. Try to connect, as I was saying, that like, it's good to have an integration with your bank account and your accounting system. So just if there's a possibility that you can connect your bank account to QBO, Xero, or Paperwork, take advantage of it. Make sure that you have enough controls in place. Yeah, like you start the company with your buddy and then everyone trusts everyone, but make sure that if one of you is spending money on something, it's approved by this other person. So having those approvals in place and then documentation, when it comes to the time, which I'm sure that it will happen to a lot of you that you go public, or if you want to get audits because your investors are asking for audited financial statement, it can save lots of headaches, and it can save tens of thousands of dollars of spending time going through the rabbit hole of finding a documentation, because we forget things. We don't remember everything. So make sure that you have documentation and enough controls in place. Be on top of your tax remittances, whether it's your personal tax, whether it's the corporate tax, whether the GST, make sure that you're on top of it. Going to a registry and incorporating company doesn't mean that you have all these accounts with CRA. So you need to open them up. For example, if you incorporate a company and as of December 31st, 2020, and you open up if you don't open up a GST account until the end of January, you won't be able to claim any GST expenses or ITC that you have had in the month of January. So you have a month. So when you incorporate your company, it's free. Just open up the GST account and try to capture the GST that you're paying so you can claim your GST. Yeah, as I said, as you're building processes, maybe take some time to document them. So as new people, they come on board with the company, so they can use those training manuals or those like policies and then get into the habit of implementing them. And everything starts with the tone at the top. So if you are the founder, if you are a CEO of your company, lead by example. Like be on top of your expense reports. If you're expecting your employee to provide you the proper expense report at the end of month. So. And yeah, know your CPA. Not all CPAs are the same. So everyone in the CPA world, and CPA stands for Chartered Professional Accountants, are different depending on their experience. For instance, I never had the experience of working with public companies during my CPA time. I was working for kind of mid-tier CPA firm, and I was working with private enterprises like most of you. Like I never worked with public companies, so I didn't have exposure to public company like audit. The tax CPAs are rarely the same as auditors. So tax is a different beast on its own. So if you're dealing with tax matters, which I'm sure that everyone is dealing with tax, make sure that you have a tax accountant. Your CFO, probably he or she had a different experience. Not all CPAs are the same. And to be honest, it doesn't matter if you go with big names. Yeah, the big names, they come with big expenses or big bills. So make sure that you, relevant to the size of your company, you pick the CPA firm or the company that's going to be, as I said, relevant to the stage that you are at. Make sure that you are on top of your corporate tax return and then file them. If you are taking advantage of SHRED, make sure that you consult with, and I'm sure that some of you probably have prepared SHRED. There are some companies out there that they can help you to prepare SHRED. You can have in-house people to take a first stab on the draft, and then maybe you get some consulting from outside advisors. So make sure that you prepare your SHRED and taking advantage of the credits that are available to you. Make sure that you do your personal tax returns. It doesn't have, maybe it has, I don't know, implication on the company, but you don't want CRA to come after you because you haven't filed your tax returns. Yeah, but maybe just call H&R Block or anyone else. And to be honest, doing a personal tax return these days is very simple. So just go on TurboTax or whatever software that you may want to use, and then just prepare your tax return very easily. Yeah, as I was saying, that most likely if you're in the earliest stage of your startup company, you just need a simple compilation or notice to readers financial statement. You don't need a review because it's going to cost you at least $5,000. You don't need an audit. It's going to cost you probably more than 10 grand, depending on the size of the company, the scope of the audit. So yeah, maybe use the compilation, but the difference between compilation and reviewed financial statement and audited financial statement, sometimes it's not about the numbers, it's more about the disclosures. So you put some notes, you describe the numbers, and then you kind of tell the story to your investors who may not be in the same office to talk to you. So if you are investing in Microsoft shares, you won't be able to go and talk to the CEO of the company, and he can describe how the company is doing from the financial perspective. So there are numbers in their financial statement, and then probably there are 200 pages of all kinds of disclosures. They're talking about their plans, what they have spent their money on. So the early trick for an early stage startup that can save you costs when you need the review and audit down the line is, as you're preparing your compilation financial statement, make sure that it has some notes, and that can be really, really helpful. Yeah, and when you're dealing with your investors, make sure that you have the full package ready. Make sure that you have an investment teaser, make something that's enchanting, and it helps people to get to know what the main value proposition for the idea or what the product is. Build a nice investment deck. Make sure that you have NDA in place if you're disclosing information, and then you're dealing with some proprietary information if you're building something that can be patented later on. Make sure that you have NDA in place. Make sure that your business plan, if you read, so Guy Kawasaki has another book, it's called The Art of Start. And he talks about business plans versus business models. And then I really like what he explains, that like most people, they don't have time to read 30 pages of business plans, especially if you're dealing with investors, with business angels, with VCs. They get thousands of these kind of investment opportunities. So they don't have time to sit down and then read like 30 pages of long business plan. I'm not saying that do not prepare it, but make sure that you have a very fine-tuned executive summary that you can share with people. So when they read that one pager, they can understand what exactly they are going to invest in. Make sure that you have your cap table ready, like who owns how much in the company, what rounds you have gone through, and have some financial projections. If you don't measure the historical transactions, probably it's really hard to project the future. So doing accounting is really going to help you with your finance. So, and as you're getting like term sheets from investors, don't get excited and then sign them right away. So make sure that you read them and maybe talk to some people, let them read it, and then talk to your legal advisors, to your CFO, and make sure that what you are giving up if you are accepting an investment. And as I was saying, that focus on the business model, getting the product market fit, and I wish everyone the best of luck in their entrepreneurial journey. We have only 10 minutes. Obviously, I won't be able to go through slide 17 to 47, so I'll pause here and I'll answer the questions that you may have. Thanks, everyone.
Thanks so much, Mason. So I think we have a couple of questions in the chat right now. So maybe I'll read them. I mean, if Pauline, I know you asked a question about Shred and NRC IRAP. If you want to ask it, you can turn yourself off mute and you can ask it, or otherwise I can just read it too. Either's fine. All right, so I'll just read it. So Mason, Pauline's question was, can you explain in more detail how to account for SHRED tax credits and grants like NRC IRAP or Alberta Innovates?
Wow, it's really hard to talk about how you can capture every cost category, but there are some qualifications for expenses that can be counted as SHRED. So if you go to the like if you go online and just SHRED and criteria, you would be able to look at some of those stuff, like some of the stuff that I have on top of my mind. What you are developing should be some sort of innovative product or service. So if someone else has done something out there which you are replicating, most likely you are not doing anything innovative. So maybe it's not qualified for SHRED. So I will be more than happy to connect you, and I'm not a SHRED expert by any means. So I will be more than happy to connect you with some of our folks within Tandem Network, and that can help you with answering your questions if you are trying to figure out a very specific question.
Awesome. And then Fahim, you asked a question as well. If you want to take yourself off mute, you can ask it also, or we can read it, whatever you'd like. maybe I'll just ask it. I'll just ask it, Mason. So
Sure.
Fahim was wondering, instead of using a CPA, can I get my general bookkeeping accountant to file my corporate taxes? What would I lose for not engaging with a CPA?
That's a great question. Yeah, if you have a very simple accounting practice, or you have a simple operations, yeah, maybe your bookkeeper can help you with your taxes. But very quick example, like if you're buying a new computer, and sometimes maybe your bookkeeper doesn't know if that's a capital expenditure, and she or he is going to expense it in the current year, that's a wrong transaction. So CPAs have spent their time dealing with lots of clients. They have gone through a grueling program to become a CPA. So they have probably more experience, and they know more than your bookkeeper about anything tax related, or even like from the financial reporting perspective. So this is a general question, but usually you are making a trade-off. Like, yeah, you may pay less to your general bookkeeper, but you may lose the advantage of getting some credits from when you're filing your taxes, or maybe when you're preparing the financial statement, if they are not done properly, it can hinder your investment readiness process. So yeah, you need your bookkeeper, but I think you will always need to have a CPA along the way.
Awesome. And Dana, Chris was wondering if the deck was available for everyone to download.
Mason, are you okay with me sharing it with everybody?
Oh, absolutely. Yeah, I will send it to you.
What I will do after the session is I will share this presentation and the slide deck. And we're also going to send out a survey. I'd really appreciate it if everybody could respond and let us know what they thought of this event. And in that survey, I'll also ask if you want to be in contact with Mark and Mason and their team. And so you can put some contact info in there for us as well, so they can be in touch with you in the future. So I will send that out this afternoon to everybody. There was one more question. What's the difference between, I think, burn rate and runway?
Yeah, as I was saying, that like burn rate it usually applies to the difference between your cash inflow and then your cash outflow, and runway is how you are going through starting your startup with no revenue and getting to break even and going beyond that. So the burn rate is how much cash you need per month or per quarter or whatever time frame that you need to have to keep the lights on and keep the company going.
Awesome. And is there any other questions from the folks in the audience? I mean, we still probably have like 5 minutes. We're here to answer any questions you have. So it could be, investment readiness. What do you need in a data room? Specific, more accounting questions for Mason. Anything regarding capital raising, those kinds of things. Happy to answer them.
And you can get in touch if you have individual questions you'd like to ask. We can put you in touch with them as well. So
absolutely, yeah. You can feel free to email or add us on LinkedIn. Happy to chat with anyone.
All right, we'll probably end it here. Thank you, Mark and Mason, so much for joining us. Really appreciated having you here.
Thanks, Dana.
And we will be in touch with everyone else after this afternoon. So look for the email. It'll come from Eventbrite. Okay, thanks everyone.
Thanks everyone. Have a good day.
Thanks so much.
Have a good weekend. Bye.
Bye.